Good afternoon and welcome to Asian BizTech Midday Market Watch. I'm Samantha Voon and my co-host here with me, Brian Fernandez. Let's start by taking a look at the summary of market actions today. So Brian, over to you.
Thanks, Sam. Now, overall, Asian stocks have declined. It's a sea of red, driven by the strengthening of the yen, which has led to continuous unwinding of the carry trade. Now, losses at e-commerce giant JD.com also weighed heavily on the Hong Kong Hang Seng Index. Now, the regional downturn mirrored the dip in US stocks overnight, where an 8-day winning streak came to an end. Now, investors showed restraint ahead of the upcoming speech by Fed Chair Jerome Powell this coming Friday, which is dampening the market sentiment. Now, US stock index futures showed minimal movement during the Asian session. Now, Hong Kong in the Hang Seng decline emerged as Asia's weakest performance, dropping 0.99%. This was largely due to the plummeting of JD.com shares. It dropped approximately 11% after Bloomberg reported that Walmart intends to offload its stake for $3.74 billion. Now, JD Health International, a subsidiary of JD.com, also experienced a near 4% drop, and Alibaba, its rival, declined by 2%. These declines nearly erased the recent gains of JD.com had made following the stronger than expected earnings in the June quarter. Now, the company now faces growing challenges from sluggish demand in China, which is its largest market. Now, Sam, over to you.
Thanks, Brian. So over in Japan, the Nikkei 225 dropped 0.24% as yen appreciation took a toll on the market. The yen sharp rise from late July till early August pushed the dollar-yen pair down to around 141 yen, effectively reversing the yen carry trade. Now the dollar-yen pair is currently hovering at 145.5. Now the yen strength exerted downward pressure on Japan's export-oriented stocks, which had been the significant driver of the Nikkei's rally over the past 2 years. Data release also showed that Japan's export growth in July fell short of expectations. However, imports rose due to stronger domestic demands. Overall, Asian markets followed Wall Street's lead, with Australia's ASX index down 0.02% and South Korean Kospi gaining 0.06%. In India, the Nifty futures remain close to its recent peaks. That's all I have for today's market updates. Brian, back to you.
Now, thanks, Sam. Now, to bring in and get some expert insights, we have Glenn Yin, Head of Research and Analysis at AETOS Capital Group Private Limited, coming to us out of Australia. Glenn, as always, great to have you on the show.
It's my pleasure to be here, Brian, Sam.
Now, Glenn, for a start, we've a sea of red today. Tell us why.
Yes, Brian. I think I honestly don't think it's too bad, given that the ASX is down just a little bit, and that the global equity market has been gaining following the strong lead from the US. The S&P 500 again had just recorded a 8-day winning streak, which only happened 6 times in the last 19 years. So I think markets are quite happy. The little bit of pullback we're seeing today is probably traders swapping to defensive footing ahead of the Federal Reserve's annual meeting in Jackson Hole. So yes, not too bad at all, Brian.
Right, so not just that, like we've seen gold defy gravity as well, right? Since October, in your own words, since October 2023, it has been defying gravity and has reported countless new records. So what's powering this incredible bull run?
Yes, Sam. Gold, in other words, gold has gained nearly 40% since October last year. I think there are 3 predominant reasons behind this historical bull run. The first one is apparently the ongoing geopolitical conflicts in the Middle East. We saw another escalation overnight where nearly 100 rockets were fired, and the US Secretary Antony Blinken is now in the region, but we have not seen a ceasefire agreement being reached from all parties. The second reason is the aggressive pricing of the upcoming Federal Reserve's annual meeting, the Jackson Hole Symposium. So markets are very aggressively pricing in for a weaker dollar and that is evident in the USD index, which just broke down from its 101.22 support level. We should never forget gold is priced in US dollars, so a weaker dollar will naturally benefit the precious metal. Now, the last reason is very new and very important. That is the PBOC, which is China's central bank. It has resumed giving out quota to commercial banks to import gold. Now, the PBOC has been the biggest buyer of gold, but it stopped issuing quota back in June. And if we take a look at the charts, we'll see gold price largely moving sideways during June and August. So that's not a coincidence, right? The reason for PBOC to reissue the quota is because the Chinese yuan has regained a lot of ground against the USD. So buying gold has become relatively cheaper. So here we go, the three big reasons for a very, very bullish gold run.
Interesting, especially the PBOC moves. Now, it's gold is now touching within 2,600 is really within striking distance. Do you see further upside in gold, and what's the long-term trend overall?
Yes, Brian. I personally think gold has potential to go even higher, 2,600 or even 2,700, going from here. Now, because the Fed hasn't cut rates yet, right? What we're seeing right now is mostly speculative actions. Cheaper dollar means more expensive gold, but when the cuts really happen, it will fundamentally change the yields on treasury, on interest rates on term deposits, and the return on these fixed income securities will become materially lower. By then, gold as a non-interest bearing asset could become really attractive to both Western central banks and the individual investors. So, yes, I think unless we see the three key fundamentals we just talked about change dramatically, we should otherwise be able to see gold climbing even higher in the foreseeable future.
Right. Thank you so much, Glenn, for your valuable insights here.
My pleasure.
So we've been speaking to Glenn Yin, Head of Research and Analyst at AETOS Capital Group. This has been BizTech, Asian Midday Market Watch. Be sure to keep informed with the latest updates weekdays at 1 p.m. I'm Samantha Voon.
And I'm Brian Fernandez.
And this video and podcast will be on our website, www.biztech.asia, and our social media platforms. It will also be on our syndication partners' TV stations, radio stations, and website. Remember to like and subscribe. Thanks for tuning in.